Thank you. Thank you, Francesca. Thank you. Thank you for the nice introduction, and thanks for staying and being around. I know it's late. My name is Stephan Karpischek. I'm one of the co-founders of Etherisc. We are building decentralized insurance applications since 2016. And before I dive into the specifics of insurance on the blockchain, I would like to ask you, do you know whose birthday it is? Very famous guy. This clicker doesn't, here. You recognize him. Karl Marx. It's his 200th birthday, and back then, in the 19th century, we did not have cars. It was the early stages of capitalism, the early stages of industrialism. He developed his theory on political economics. And one of his fundamental theories is that the economic layer defines how our society looks, how we think. It defines how we think of ourselves as individuals. And what I like so much about blockchain technology is that blockchain enables us to rethink how whole industries, whole sectors of the economy work, and how we organize those sectors. So you've seen the examples of financial technologies. The really great thing about blockchain is who today can build financial products. If you think back just 10 years, financial products were a thing that was developed by an elite of bankers, an elite of Wall Street companies, and now this market, this industry is open for everybody. Permissionless innovation. It's one of the big things that I think blockchain really, really changes, and it will change how our society looks. And with this as a preface, I want to dive into insurance. This is our first product, the flight delay insurance. It's a smart contract running on the Ethereum blockchain and a bit of a user interface. And I want to walk you through this. We developed this in 2016 for the Ethereum Developer Conference. So this has been in production on the Ethereum mainnet with a few interruptions. The first time in 2016. And last year we made this into a fully legal, fully licensed, decentralized insurance business. So if you want, this is a DAO or a decentralized autonomous company running on the Ethereum blockchain. And I want you to walk you through that product. So you select your flight from where you're flying and where you're flying to. You fill out a few details, and then you get presented a policy. You select your premium, how much you want to pay. You can pay either in Ether, or you can pay also with credit card in US dollars or euro or British pounds. And you immediately see how much you would get paid out if your flight is delayed. So you click on apply, and you get, after your payment, you get this certificate of insurance. And again, this is a fully licensed, fully legal insurance business. This is issued by an insurance company based in Malta, so we can sell this worldwide. We can sell any other insurance products into the EU. And this is the last step. As soon as your flight is delayed, you automatically get a payout. And this is handled by a smart contract. So it's a very simple system, a very simple high-level architecture. You have the smart contract in the center, which is a piece of software. And to the right is the user interface, what users use to buy a policy. And on the left, we have a so-called oracle, which connects us to a data source. And there are online APIs which we can use to learn about flight delays and also to calculate the probabilities of a certain flight being delayed. Now, what's special, if you think about insurance, what's special in this picture? Where is the insurance company? does it need an insurance company? Not really. The smart contract takes the main function of what we have today in insurance companies. The smart contract takes the core business process of an insurance. It collects the premiums, it holds the money, and on certain occasions, if there is a damage, if there is a flight delayed, it pays out a certain amount to the customer. And this is exactly what insurance does too. Now, if we replace the core business process of an insurance with a piece of software, do you think this industry will change? Do you think the business models in this industry will change? I think so. We have applied this very same model to other insurance verticals. One example is crop insurance, weather-based crop insurance. It's the same principle. You have a smart contract, you pay premiums into the smart contract, you define your piece of land and the amount of time and maybe what crop you are growing there. And as soon as there is too little water or too much water, rain, droughts or floods, you automatically get a payout. And this weather-based insurance, you can apply it to several different cases. I want to show you one more example that we are really proud of because it's not coming from us. We have been contacted by a few software developers based in Puerto Rico. And as you might know, Puerto Rico has seen devastating hurricane damages recently. A lot of people had to leave Puerto Rico because they suffered from their losses and did not have insurance. And two software developers from Puerto Rico came to us and said, we have seen your flight delay insurance and we would like to build something similar for Puerto Rico, a hurricane insurance, so that people can pay a small premium into a smart contract, and as soon as there is a hurricane, like wind speed is higher than 130 kilometers per hour, they automatically get a payout. And we are very happy to support this, and I hope we will soon see this live and in production. And that's exactly what we are trying to do with Etherisc. We want to enable many of those use cases. We want to enable a lot of small and smallest insurance businesses. Everybody should be able to be their own insurance and to create their own insurance contracts. So, what are the benefits of decentralized insurance compared to the traditional insurance system? In the traditional insurance world, you have intermediaries after intermediaries after intermediaries, and they all want to take their cut of the premium. So in the end, what is paid out of, say, $1 billion of premiums in the traditional insurance world, you need to go very far to see more than 70% of the premium actually paid out to insured people as for the claims for the damages. In decentralized insurance, we don't have this whole operational costs, we don't have this overhead. A smart contract does not need to earn money, it's a piece of software. You don't need a marble building and rooms full of actuaries and people and claims assessors to run a decentralized insurance application. So from our first experience, we have seen that we can lower the operational costs by a factor of 10 compared to the traditional insurance industry, and we can also lower the time to market and the cost to develop new insurance products by even higher factors. So we have a much faster time to market, and we have lower development costs, lower operational costs. But there is one aspect that's, in my opinion, even more important. If this is a smart contract and it's open source and everybody can verify the source code, we can create provably fair insurance contracts. Nobody can hold back a payment. How many of you have had an insurance not pay out a claim? I did. And many others realize and experience such problems too with insurance, that within an insurance business, you have an inherent conflict of interest. The insurance company earns money by not paying out claims. And they have their shareholders they need to make happy. And of course, they have also their customers. And they always need to balance this conflict of interest. A smart contract does not care about this. A smart contract does not need to earn money. And I think that's the biggest difference here. Of course, this applies only to a small niche for now. But with new incentive schemes and with new developments in blockchain technology, we will see a lot of insurance use cases become possible. And that's what we are working on. So our current pipeline, we have about 20 products in the pipeline. We don't yet have resources to work on all of them, but we are reaching out to our community, and we get a lot of interest from developers too to start working on those products. You have seen flight delay insurance, weather-based crop insurance is another product, and we also are working on products for the crypto community. So for example, with wallets, we have seen David on stage with his Pillar wallet. We are working to get a wallet specification, and if you as a wallet developer adhere to this specification, and if you as a wallet holder adhere to a certain process in terms of key generation and key management, you can become eligible for an insurance. So that means if your wallet breaks for a software failure or Ethereum has a bug and your assets are frozen or your assets are lost, insurance can pay for this. The goal is to make this into a very standardized product. At the moment, we only have very one-off, very customized, highly customized products, and it's nearly impossible to get insurance for cold storage. So that's what we want to change. And we are also working with a lot of lending projects. You have a lot of projects lending out money for crypto assets being held as collateral. Athland and Salt are just two, and I'm sure there are many, many more. And they all have a problem with the volatility of the crypto assets, and we can offer insurance for that. It's more like a financial instrument, more like hedging, but it can also be considered insurance. So that's the current pipeline on the Etherisc decentralized insurance platform. And I want to dive a bit into how we believe this ecosystem should work. So on top here, you have this basic cycle of insurance, where you have the insureds on the left side and you have risk pools on the right side, and the insured people pay their premiums. A bit of the premium goes into financing the whole thing and funding the developers of insurance products. We call them sovereign workers, which need to work together. They need to collaborate to create a new insurance product and to offer this as a product to customers. And when claims are paid out from the risk pools, this goes back to the insurers. So, in order to align the incentives of all those people who are needed to work together in an insurance product, we use a token, of course. We use a token and token economics to align the incentives of all those people who need to work together. You have got underwriters who decide who can get a policy. You have actuaries who create and validate risk models. You might need claim adjusters or oracles who need to provide data and decide about payouts. You have license providers, very important. In order to sell this as insurance, you need someone with an insurance license. And of course, you have distribution channels, which actually bring these products to the market and to customers. How are they incentivized to work together today? In the traditional insurance industry, you have companies, you have corporations, you have enterprises, which pay salaries to actuaries, which pay salaries to underwriters. But the big problem here is they don't get a direct share of the money that their insurance products are generating. With such a model, we can realign the incentive schemes and we can create a much fairer model at lower costs. So this benefits the customers, but it also benefits these independent sovereign insurance workers that can now work together without being employed by an insurance company. They can still work together and create new and exciting insurance products on the blockchain. There is even more to that. if you are an investor, you might want to invest in risk. In fact, there are financial instruments which link the financial system to the insurance world. These are called insurance-linked securities. So you can buy, for example, cat bonds to expose yourself to some risk and, for example, hurricanes. Yeah, it's the prime example for insurance-linked securities. And a lot of investors find this very interesting because it's not correlated to other financial instruments. And that's a very good thing. You don't want correlation if you want to diversify your investment portfolio. So we call those risk pool tokens. It's a clear security token, and it's a bit of a challenge from a regulatory perspective, because at the moment we would be only allowed to sell this to insurance and reinsurance companies. But of course, this is an exciting outlook for the future to democratize access to this market, which so far has been highly monopolized, and there are only so many reinsurance companies which currently take this market and take this exposure to risk. We want to open this. So we have talked about tokens. David gave a very nice overview about tokens. I want to present one of the utility functions for our protocol token, for our DIP token, Decentralized Insurance Protocol, or Decentralized Insurance Platform, and that's oracles. So here you have the smart contract system that is operating the insurance product, and here you have an oracle that's providing some data for that insurance product. In the case of flight delay, this could be flight stats. We are working with Oraclize, who are providing an oracle service, and they provide the data for this flight delay insurance product. Now, from a customer perspective, it's absolutely crucial that the data quality is good. So the data needs to be there on time, it needs to be 100% correct, and if Oraclize or FlightStats fail to provide the data, the customer experience drops. We don't want this. So we introduce a staking function. The oracle provider and the data provider need to stake tokens. They need to stake DIP tokens in order to participate in this product. Of course, they get also compensated, so they have a positive economic incentive. But with the stake, they also have a strong negative economic incentive. If they don't deliver the data, they lose parts of their stake, and we can use this stake, we can use those same tokens to incentivize another data source. If you think of an Amazon Mechanical Turk, we can ask people to please provide that missing data that our oracle was not able to provide. And we can do this in time. So we can basically auction away this service for others to provide that service. That's one utility function that we have foreseen for the DIP token. And we are working with others. For example, if you want to distribute insurance products, you also need to hold DIP tokens. This is the structure that we are currently building. We have founded a foundation, the Decentralized Insurance Foundation, that's located in Switzerland, in Crypto Valley Zug. As we heard, Switzerland is a very nice jurisdiction to operate your blockchain business in, and I fully agree. We will found another commercial entity which holds insurance licenses and other entities which again hold insurance licenses for different markets, so that we can offer insurance products to a wide range of markets. And our first ones in Europe will be based in Malta. Malta is also a very friendly jurisdiction when it comes to blockchain and also insurance. So for us, it's a very good fit. And this whole system, the Stiftung, the foundation, will be funded by a token generating event. You used to say ICOs. Our lawyers told us don't use the term ICO. We say token generating event. So we stick to this. And this is a very community driven project. We also organized a conference last year in very close proximity to the Ethereum Developer Conference. So D1Conf, the Decentralized Insurance Conference, we basically invited every project that was working on something similar. We had prediction markets there, Augur and Gnosis were there. We had people from Consensus, we had Nexus Mutual, We even had traditional insurance players. AXA was giving us a visit, and we are very proud of that. So we will have another one this year. And of course, you are all invited to join the next iteration of D1Conf. Now, as one of the last slides here, I want to give you a bit of a motivation why it's so important that we have insurance on the blockchain. In this diagram, you can see the different countries, the different economics, and you can see here you have US, Switzerland. I'm not sure if the Netherlands are on there, probably not, but they would be up here as well. And here you have the percentage of the GDP that goes into insurance as a premium. And on the x-axis you have the GDP per person. So what we can see here is that the highly developed economies, a lot of the GDP, or relatively much of the GDP, goes into insurance. Insurance is a vital factor, it's a crucial factor of any developed economy. And now think about how much goes into insurance premiums in the crypto economies. Almost nothing. This will change. As this decentralized economy, as the blockchain economy evolves, we will see more and more of the GDP or more and more of the assets need to go into insurance, because insurance is such a fundamental function of any decently developed economy. With that, I want to close. I need to tell you that we are doing a token generating event. Registration is open. If you're interested in this, please register at etherisc.com/registration. And that's it from my side. Thank you very much for your attention, and enjoy the last talk, I think, from Humanic. Thank you so much.
Thank you. Thank you so much. Thank you, Stephan.